viewers, let's move on and let's shift focus to some of the earnings then. And we will talk about SBI Cards, which is seeing a cut of around 5.5% in today's trading session after the company missed its numbers this time around versus the street estimates, wherein we have seen that sequentially there has been a decent growth, but a bit of a pressure when it comes to the NNPA as well as GNPA numbers. So let's connect with the management itself and understand going ahead what is the outlook for the company. And with this, let me welcome Abhijit Chakravarti, MD and CEO of SBI Cards. Very good morning, Mr. Chakravarti, and thank you so much for your time. Just wanted to start by understanding the industry dynamics at this point in time. What we can see in your numbers that there is a bit of a stress, not just for you, but this is what we are spotting for the whole system. So any specific reason that you are seeing at this point in time for the industry and for your company?
So we are not really looking at any specific cohort. If we look at our overall credit costs and the gross NPA profile, we have remained almost steady. Rather, quarter on quarter, it has come down a bit. So we did see some cohort earlier in the previous quarters and earlier, but then there we took the portfolio actions and then we have seen good results coming out of it. Subsequently, what we are looking at is that overall unsecured loan scenario prevailing in the ecosystem, somewhere we are not untouched out of that. So we are finding that there are individuals, there are account holders who are showing signals of a bit of stress, and then we work on them. We have our early warning signals, we work on it, we take appropriate account level actions, which includes reducing the limits, not offering them any upside sales. So somewhere we will be working continuously on this strategy of maintaining the portfolio and as well as the account level actions which we have been taking, because we are not seeing behavior across any particular cohort. Having said that, our recent acquisitions, after we started taking actions around 6 months back, we have seen the recent acquisitions behaving comparatively much better than the earlier vintages. So we are confident that whatever actions we have taken, they are giving us good results.
Right, sir. Very good morning to you. This is Shell also joining in the conversation. Going forward, are you seeing any specific measures of recalibrating or calibrating lending going ahead? Are you expecting the stress to come down or so? And also, if you are expecting to come down, if you could tell us how quickly will it come down?
We have identified certain segments or pockets where we are going a bit slow, and along with that, what we do is we have laid emphasis on the collections part. So collections is getting more emphasis from us, because we are looking at early warning signals and taking appropriate collection steps early in the account itself so that we can cut losses. So that is the strategy which we are going to follow, and we find, coming back to the futuristic approach, somewhere we find that the stress level will remain elevated, a bit elevated. Reason being, the stress in the overall stress in the ecosystem, we are finding it to continue. But then, as I said, for us specific to SBI Card, we have taken the appropriate steps and we will continue to maintain a lower trajectory on the stress levels.
Okay, Mr. Chakravarti, where should one see your credit cost stabilizing, given that you just mentioned that the stress level will remain elevated? Is there a change in the expectation here going forward?
Yeah, so we expect the credit cost to remain elevated a bit, probably around the same levels. But as I said, we have taken various measures which we expect to give us good results going forward. And we have not seen any runaway scenario. If you look at it, we are already at, in spite of whatever is prevailing in the market, we are already at a lower trajectory from the previous quarters.
Right, Mr. Chakravarti, let's talk about your margins. If you look at the margins of the quarter gone by, they've actually moderated, but there was an expectation that the margins will recover, were supposed to recover rather. So now, where do you actually expect the margins to settle, and also by when should one expect some recovery to kick in for your margins?
Margins are a factor of various prevailing scenarios. Like we have seen even customer behavior changing a bit. So while we take care of the cost of funds on one side, the earnings side also is dependent upon the customer behavior. So we have been maintaining our interest bearing NEA. If you have noticed, we have been maintaining it steadily at around 62%, and we would like to maintain and grow further given an within the prevailing scenario. So margins will remain around the same levels, and we will continue to work to grow towards that.
Mr. Chakravarti, by when would your EMI and revolver mix start improving? Any color that you can give us on the outlook ahead?
Again, revolver and EMI mix will always prevail as per the customer behavior and expectation. What we have seen is that our recent acquisitions over a couple of quarters, we have seen our age profile improving a bit. Now, what happens is with the improvement in age profile, we find that the consumer consumption behavior may be changing. If that happens, we expect a slightly better scenario, the mixed part of it. But as I said, our objective is to maintain the interest bearing NEA and ensure that whether revolver or EMI, my portfolio should be earning interest.
Right, let's talk about your market share, sir. Then we saw some tapering off with regards to your market share in the month of September. This after July and August were really strong months. Any other reasons that you could attribute this particular drop in your market share, and are you calibrating it in any way now?
Our spends reached an all-time high during the quarter to 79,000 crore. And we have to see one more aspect that compared to last year, the festive season was spread over 2 quarters, Q2 and Q3. This year, the festive season is in Q3. So the expectation of spends being higher will be much more rational during the current quarter, and we have seen the consumption sentiments that have prevailed. We have also gone into market with a large number of offers. We have given almost 2,200 different offers spread across different segments. Apart from the e-commerce and apart from e-commerce, we have spread across the offers to 2,700 cities across the country. All this will be coming, will be bringing us good results, and during this quarter, that is the expectation. Market share, what we do is we work on our business strategies. We work on our business strategies, we work on our business goals, we work on our internal targets, and we continue to work on that. That will be our ultimate company business strategy.
Okay, Mr. Chakravarti, with this, we'll let you go on that. Thank you so much for joining us today on the result highlights and wishing you all the best for the upcoming earnings. But with this, viewers, onto the buy now, sell now lens. Let's move forward in today.